Hello, welcome. This is Stocks to Watch on BloombergQuint. I'm Agam Vakil. Well, we're going to take you through three stocks which are in the news and talk to them with our experts. Today we have with us Parthiv Shah of Tracom Stock Broking. But before I go across to Parthiv, let me address the stocks that we have today for us. We have Pidilite Industries right at the top, where we've seen its fourth quarter earnings come through. We've seen a decline in revenues, and profits have, on the other hand, declined by as much as 33%. But they've also seen an increase in improvement in margins coming in at around 19.5% versus 17% earlier. And on that note, let me get in our expert today. Parthiv, good morning and thanks for joining in. Let's start by talking about what you have made of Pidilite at this point.
Good morning, Agam. So, Agam, we know for the fact that whenever we have discussed Pidilite, even in the past, it's a type of a very, very resilient company, a company with a moat in real sense, because they've had dominant market share in the adhesive segment and they've held on to it and they've always constantly innovated. Now, if I were to talk about the last quarter, no doubt, I think the positives, if I were to first talk of, were the expansion in the gross margin. And this is purely attributed thanks to the lower raw material costs. Because I think the VAM prices, if we see, had fallen off from levels of almost $1,100 to levels of around 700 to 800. And they are still low. So I think this advantage is kind of intact. Even looking at the little management commentary, what we witnessed is that right until say 21st of March, I think they did grew revenues to the tune of 10%, which is quite healthy from the base that they cater to. And I think it was just unfortunately the last 10 days of the lockdown in March where they lost almost 11.5% of their sales to the tune of around 150 crores. But nonetheless, I think now we know for the fact that coming quarter one, I think the first month, April, which was totally under lockdown, so that's going to get affected. But I think the soothing commentary comes from the fact that, next 2 months are gradually showing some signs of improvement and green shoots. And I think the key is the commentary coming from the rural segment, where they believe that the impact of the lockdown and in terms of the gradual recovery is a lot better. So going ahead, despite the fact that it still stays a slightly pricey stock, this is a story that we like for the long term. And all the divisions, I think they've held up quite well. And I probably believe that this is such a scenario where they'll be in a position to garner more market share. And once the economy turns around, they're going to grow back to the normal volume growth trajectory. That's where I think we'll see the full impact of operating leverage. So despite the fact that this quarter we had seen negative operating leverage, they've still held on to their margins extremely well, and so are the gross margins held up very well.
Okay, fair enough. That's your view on Pidilite. Let's move on and talk about HDFC AMC then. And well, we all know that Standard Life had put up an offer for sale for HDFC AMC yesterday. As far as the non-retail segment is concerned, where the offer for sale opened yesterday, it's received 2.7 times subscription. And the retail segment opens for subscription today in terms of the OFS. Partha, we've seen some weakness. Of course, that was largely on the fact that what Standard Life is looking to sell here. Yesterday, it was around the 2,400 rupee mark. How are you rating HDFC's business and also the price at which it is currently going at?
See, as you rightly pointed out, Agam, that the weakness in HDFC AMC was primarily attributed due to the technical factors of the excess supply. But I think one positive that comes out of this supply is that, once the management stake goes to around 75%, I think we know the fact that the free float increases. And due to the increase in the free float, there are good potential chances that the weightage of this particular company goes up, whether in the FTSE indices or the MSCI indices, which again lands up bringing new flows in the long run. So which is, I think, a good thing. And that's why we tend to see after any such major supply coming from the promoter stake selling, I think the stock eventually tends to recover. Now, Agam, if I see from a year-on-year basis, I think this stock has already corrected by almost 35% from its all-time peak of around 3,700. And no two ways about it. We know that HDFC AMC, a bulk of its income, almost 70 to 75% of its income comes from the equity funds. And I think we know for the fact that on an average, I think most of their funds, along with the market, have come down by 20 to 22%. And that's the reason why I think the market is adjusting the price, because one knows for the fact that, the income in terms of the trail basis is also going to get hammered. But I think the good thing that what the management has constantly done is focusing on cost optimization, whether it is cost related to the distributors, whether it is cost related to marketing, because post COVID, we know for the fact a lot of heavy expenses which otherwise these asset management companies used to do in terms of hosting their distributors in hotels, in terms of hosting, I think a lot of events and programs now are going the digital way, and the cost in those segments are just like 1/10 of what otherwise they used to spend on. So I think overall, I believe it's a solid compounding machine, a huge free cash flow generating machine, a very good dividend payout machine. And HDFC AMC, despite the fact that the visibility for the next 6 to 8 months looks bleak, but once the equity markets bounce back, I'm very confident this is the type of stock one should own in the portfolio right now. And at levels of around 2400, it's now come down in terms of valuations to around 40 times, which I think for such solid businesses to be quite reasonable.
Okay. And we move on to the final stock that has been the news of late, and that's India Cement. Now, the interesting thing is that we all know that veteran investor Radhakishan Damani already has substantial stake in the company. But yesterday, Bloomberg News did report that the investor is considering to take control over the company. That means over 50% well ownership. And this is, of course, sourced based to Bloomberg News. But India Cement has come ahead and given us a clarification that this is factually incorrect. That said, Parthiv, where do you stand on India Cement 1? I'm sure there'll be a lot of investors out there who will be thinking that if an investor like Radhakishan Damani is getting in, why don't we get in too? Is that the right approach? We must also keep in mind the fact that earlier he was just an investor, but should this culminate into a proper ownership when he becomes a promoter to the company, can things change for that one? Only from the point of view that he is an investor and known to make some perhaps astute investments.
See, I think again the good thing is that Mr. Radhakrishnan Damani, not only he is one of the best investors in the country, or rather in the world, I would say the way he has created wealth. I think he's one of the best entrepreneurs as well, because now the markets is aware of the fact that at age of 55, he landed up creating, which is now what we call as DMart, almost 1.3 lakh crore sort of a market cap company. So I think markets will have no doubt in terms of the acumen of Mr. Radhakrishnan Damani, if at all this news which were to culminate into a final thing of him taking a controlling stake in the company. Because I think if you look at the arrangement, Mr. Srinivas holds around 29% stake, and I think whatever the source based talk is not about a hostile takeover. As a matter of fact, Mr. Srinivasan probably would have always been worried about an hostile takeover of his company. But now with a friendly investor like Mr. Radhakrishnan Damani, who and along with his family owns around 20%, and if he were to increase that stake, I think that will give a lot of confidence to investors of India Cements. Because I think we've seen, Agam, that despite the fact it's not a small company, it's almost a 15.5 million ton capacity cement player in the south, but it has always held a huge discount versus a lot of its peers like Ramco Cements and other cement companies in the south. And the reason being that maybe the plants need a lot of modernization. If you look into the return ratios were a little lagging, and that is where I think the management's focus was doubted by the market. But now if such a astute investor were to take part, and 20% is again not a small stake, and if you were to further increase it going ahead, I think that will be a big thumbs up to the investor sentiments. And back in 2019, I recollect that India Cement did have plans to do some sort of 1300 to 1400 sort of crore of capex in the central and the eastern part. And if at all, I think investor like Radhakrishnan Damani were to drive that capex, we know his capital allocation skills. And again, I think, Agam, rather I would say it's an overall huge thumbs up to the Indian cement industry that a person like Mr. Radhakrishnan Damani is giving a big thumbs up to this sector.
All right, fair enough, Parthiv. We'll leave it at that. Thank you so much for joining us and taking us through your views on the stocks that we addressed. And that's a wrap on this segment of Stocks to Watch, but there's lots more lined up. Stay tuned to BloombergQuint.